Hello there everyone. Today's video is a continuation of our series on tax efficient investments. Specifically today I'd like to talk about the EIS, the Enterprise Investment Scheme. So what is the EIS? Well, it's for investors to take a punt on smaller companies rather than say the FTSE 100 shares. Similar in vein to the VCT, the Venture Capital Trust, which we talked about on a previous vlog. The difference being with an EIS, the investment is not in a listed company, which in turn invests in a series of smaller companies. An EIS investment can be in a single company. Now, also, you remember when we talked about the SEIS, which was the Seed Enterprise Investment Scheme, which was meant to, for business angels taking a real high risk on a brand new startup. The EIS can be targeted towards firms that have been going for a few years. So they have made a few quid. They're not brand new startups. They can be profitable. They can be of a certain size, several million of assets on the balance sheet. So it's not meant for the same type of investment as the SEIS, but it's for a larger type of business than that. So typically, if you are an investor and someone, for example, might come up to you and say, would you like to invest in my business? If it's a friend or family member or an investment opportunity that you've come across, you could say to them, well, have you got EIS status? Because if the company has EIS status, then all of a sudden it's a lot more attractive to you as the investor to put a few quid in, because HMRC say that if you have that EIS status in the company, the investor can knock 30% off their income tax bill for the amount that they put in. Similar to the VCT. Not as generous as the SEIS, which was 50%, but that's because they are meant to be not as risky. So 30% upfront income tax relief. You have to hold the shares for a minimum of 3 years, or HMRC will claw back the upfront initial tax relief. And then when you sell them, there is no capital gains tax. So no CGT at the back end for selling EIS shares. You can also, with the EIS, elect to treat the investment as if it had occurred in the previous year. So give an example of that. So we are in August 2020 right now. We are partway through the 2021 tax year for income tax. If you spot an investment opportunity tomorrow and you'd really like to put some money in, you can elect to treat the investment as if it had occurred before the 5th of April 2020. Why would you do that? Well, you might choose to do that. For example, if you had a big income tax bill for the year that ended April 2020 that you haven't yet paid, it might be due in January 2021. Investing now could reduce that. It could be that you know that your earnings, your income tax on your earnings are going to be lower this year than they were last year. So there are all sorts of reasons why you might choose to elect to treat the investment as if it had occurred in the previous year. You don't have to. Obviously, you can treat it to have occurred in this tax year and get your 30% off this year's tax return bill as opposed to the previous year. So EIS, all sorts of sectors, all sorts of industries that you can invest in. If you are the company director, so wearing the hat of the company director now as opposed to the investor, if you're a director, you've got a company, it's doing okay, but you're looking for some funding, you are looking for some equity funding, then having your company designated EIS will attract possibly more investment. It's more attractive to the investor because of that generous tax break the investor is going to get. So what you would choose to do is write to HMRC and say to them, can you please give my company this qualifying EIS status, which is a process that you have to go to. They then come back, hopefully say, yes, you're good to go with that. And then that piece of paper, you wave it as a flag to the potential investors to say, look, I've got this from HMRC who say that this company will qualify for EIS. Therefore, you give me £100,000 for X% of my business. It'll only really cost you 70,000 because the tax man will let you knock 30 grand off your tax bill. So great for investors, great for business owners looking to attract some equity capital. If you like this video, do please subscribe, and I look forward to seeing you soon.